The views and opinions of this program are those of the host, guests, and callers. There is substantial risk of loss in trading futures and options, which you should carefully consider prior to trading.
For over 95 years, we've set the bar. Power, we restored it. Protection, we reinvented it. Record yields, we redefined it. If there's one thing we know at FS, it's that just because something hasn't been done, doesn't mean it can't be done. We're never satisfied unless we take your farming operation to the next level. Run your equipment at peak efficiency and bust the bins this season. Visit fssystem.com.
As we take a look at the markets on Thursday after the close and after the November WASDE report, pretty much turned into a risk-off day in the grain and oilseed complex. Cattle trade had a rough day as well. Let's try to pick this apart and make sense of things. Joining us for market analysis, Bryan Doherty, Senior Market Advisor at Total Farm Marketing. Bryan, good to talk with you, and not necessarily a positive day in the ag markets as a whole, as we got just some bearish numbers from the WASDE. Cattle had a rough day. Hopefully we could find some sort of positive here today, Bryan.
Yeah, well, the positive is if you're a buyer of any of these products, they got a little cheaper. So,
true.
Without being too sarcastic there, the USDA reports, I think there was a general sort of feel that we might see some upward revision to yield, and we did. It was more than the market expected. The USDA also anticipated that lower prices will probably lead to a little more demand. So when you put it all together, it was a down day in corn, beans, and wheat, but really the ending stocks or the carryout numbers, I'm going to see marginal changes within the neutral territory. But when you're already in a negative environment, which is what commodities are, and really a lot of markets are, it's pretty tough, and that's what we saw today. So additional risk off in the marketplace, and that's the challenge. When you look at the numbers, I want to just break these down real quick on the corn yield. So the market was expecting 173.2 bushels, Jesse. Last month was 173. So the market wasn't looking for much change. The yield came in at 174.9. So that's a bit of a change, more than expected. But when you put in all the little line item numbers and demand, you look at the carryout number, and last month the carryout number was 2,111,000,000. Now it's 2,156,000,000, and the market was expecting 2,129,000,000. So it's only 27 million bushels less or more than a month ago. That's when I talk about the neutral territory. If it was 50 million, give or take, I'd call it neutral. And then real quick for you in the soybeans, the yield number there came in at 49.9 bushels. The market was looking for 49.5. Last month, 49.6. So a slight increase there. Carry out 245 million. The market was expecting 221 million. So 24 million bushels more. It's about a 10% increase. It's a little negative, but there again, in soybeans, if I see a number of more than 50 million, it has meaning. Corn needs to probably be more than 100 million to have real meaning.
Well, and I appreciate you breaking down those numbers for us. To me, it felt like that even with more changes on the corn balance sheet, the corn market absorbed the day better than the soybean market. Would you say that's the case, Bryan?
Well, if you look at the relative change, corn was down about 7, beans down about 22, so about 3-1 in that context. Now, beans have had a pretty good run here lately as well. And so a couple things happened in the bean market. Yesterday, the day before, market went up above a trend line, resistance, but closed back under it by the end. So that left a little bit of, we didn't punch it through kind of mentality, and then a defensive posture in front of the report, and the report's a little bit negative. And then the 10-day outlook, if you're looking at the news yesterday, was pretty warm and dry. Well, that stays, but then the 11 to 15-day view turns a little wetter. So beans have kind of these mixed signals here. I would say, though, back to your response, the corn market did slip into a new low on December corn today at 466.5, taking out the previous low, 467.75. But I would say the corn market bent, but it didn't break today. It kind of, think of sort of one of those hammocks. It's kind of a little bit heavyweight in that hammock. So we're hoping it's not breaking through. But it kind of held today, and so I think the market's going to take a pause here and go, well, anybody can be negative, but realistically, are farmers going to sell this in droves? I think part of this is the better yield, a little more extra corn into the marketplace. Farmers don't have all the storage they thought they'd have. We're at the tail end of harvest, and that's what we're hearing too. Guys, I just have more bushels, and they're letting it go.
On that note, I'm hearing a little chatter. Eastern Corn Belt's lagging behind in corn harvest, as we saw on the latest crop progress report. I'm hearing some chatter that some elevators, ethanol plants are turning away folks right now because they just have too much corn right now, and especially in the Eastern Corn Belt, I've heard some of that. And so some folks, if they do want to sell, they're having to drive. Are you hearing any chatter like that as well, Bryan?
Oh yes,
from the Corn Belt?
In the everybody's going at the same time, right? So you got this big funnel of corn being pushed into places where if they just don't have capacity for it right now, they're cutting back hours, they're turning people away, for lack of better words. That's not untypical in bigger crop years, in particular when you look ahead. Now, most of the Midwest has a pretty good forecast in warmer and drier. And so the other chatter I'm hearing from is producers saying, they're paying me more for delivery 30 days from now than today. I might just let it stand in the field. Now, I don't know if that's going to be a lot of farmers, but I've heard at least more than two. So, and it's more like 3 or 4. But if there's a little smoke, there's a fire that, look, if you can't move the stuff, the weather looks pretty good and there's not a threat of high winds and snow and things like that. Let it dry down the field a little more and, get at it when you can. But the bigger, the underlying problem is just nowhere to go with it right now.
Well, your point as well about a new low in December corn and kind of the corn market bending, not breaking. Are you concerned that we are opened up to a downside potential, though, in this core market, maybe going down to fill some gaps or get down around that 450 level here? Is that something that you're going to pay attention to as we get to the end of the week?
We're still with a mindset of being defensively postured. So what does that mean? That means if I have customers that have positions in the marketplace, we stayed short, or we did some like fences where you buy, put, sell, a call into this report. And here's the rationale why is because a lot of farmers, just because it was such an unbelievably challenging year, didn't make as many sales as they intended to. So there is going to be some of this, what we call overrun corn, or just the marketplace knows the farmer has it. They're not running to grab it right now. Traditionally or historically, when farmers own the majority of the corn, it gets tough to get a rally started and get any real strength to it. And, we look back a few weeks, we saw December corn get up around 509. I think there was a technical play, a nice inverted head and shoulders, got up to a resistance point, reversed, and it's been sort of straight down since. During that window, though, that's where I think where the harvest got further underway, we heard more consistent yield results and better yield results, coupling with that technical weakness.
On the soybean side, last couple of days, we've seen pretty big flash sales, confirmation of sales to China or unknown destinations. Your thoughts on that? I wonder, are we just simply at this point catching up to where we should be with soybean export sales, Bryan?
Well, that's what the market sure seems to be reflecting. It's kind of like one of those things, be careful what you wish for. We kind of got what we wished for, but the market already been up over $1 prior to these bigger announcements. So now it's maybe buy the rumor, sell the fact. It also may be just reflective of, look, South America does have some issues. Now, I think what plagued the market today is the USDA didn't make any changes, and neither did CONAB, which is the Brazilian equivalent to the USDA. So, in the last 2-3 weeks, we keep reading about, troubles in Mato Grosso and late planting and too wet in some areas, and then really kind of brutally dry. It seems like the CONAB has taken the route of the USD and be very slow to get your, too far ahead of your skis in trying to estimate crop losses. So we didn't get any help there. We didn't see also a surprise drawdown, even though private estimates are taking this crop in Brazil down 2, 3, 4, 5 million metric tons. It still hasn't come from the government. So you had 3 things happen this week. You didn't get a positive report. You ran up against that upper line channel, what I call channel line resistance, couldn't punch through it and close above it. And then it just looks like a market that kind of got tired and didn't get a bullish report. So I think the bulls kind of took their money and they'll wait a day or two and decide whether to jump right back in, or maybe it's done for right now.
We are joined today by Bryan Doherty, Senior Market Advisor at Total Farm Marketing, as we recap of the trade after the November WASDE report. Also, though, I want to turn our attention to the livestock market, Bryan. Cattle, rough day on Thursday with huge losses in both fats and feeders. I can't make sense of it. Maybe you can. What is going on in this cattle market right now, Bryan?
I'm going to argue it's probably a little more technical in nature and some real kind of heavy, what I'm going to call maybe liquidation. And so it goes back to, we've talked about this before, and this cattle market was in a textbook uptrend forever and set back and go high or into new highs and higher lows and high, just a bit of uptrend. Kind of looked a little tired, but once it pushed through all those big moving averages here about the 20th of October, and then it confirmed that it's got a downtrend. And then all of a sudden the head and shoulders formation came into play. And then all of a sudden we're seeing where economic concerns still are out there. And then you saw the Fed talk today, kind of a little bit hawkish in nature. Hawkish means rising interest rates. Read a report worldwide due to strife and wars that long-term interest rates may yet have to worldwide go higher. Some things that just make it really challenging on a bigger picture scale. And the cattle market seemed to bend under its own weight today. We saw a nice reversal up yesterday, but boy, what takes 6-8 months to go up, you can give back half of that or more in 6 or 8 weeks, and that's exactly what's happened in the cattle market. Now, do we have that many more cattle? I'm not so sure, but I do think that the market is concerned about is that higher interest rates and inflation is likely catching up to the consumer, and we're just going to likely see a general slowdown in all areas of the economy, and the stock market has reflected that some as well the last 2 months. But today's kind of a head scratcher. This looks like heavy liquidation. As the market tripped lower, I think it just continued to trigger stop orders.
Yeah, and that's a good
orders,
point. Yeah, stop order, sell orders. That's a good point there. And I'm in the same camp as you. I would agree that technical in nature makes the most sense here. And with this overall economy, you alluded to it. We continue to watch the worries. We continue to watch crude oil fall lower with some of the demand concerns there. And it feels like that no matter what is said by the Fed, that this economy is still, there's a lot of uneasiness out there amongst farmers and ranchers and all Americans about this economy right now, Bryan.
Yeah, it's about the economy. It's just uneasiness on the wars. Wars as in plural. It's uneasiness with sort of the, what is Iran going to do next, or what's going to happen in some of the areas near Palestine. It just it's a period for someone like me when you look. Boy, it's hard to find positives right now. It's hard to find wins. Now, that doesn't mean they're not out there, and there's always a bull market somewhere and opportunity. But on the surface, it's it's challenging for everybody. I don't know who's on easy street right now, where things are just humming along. You can kind of see that. So you get a little bit worried, and I think the market's worried that it could get worse, and so that kind of promulgates the fear. And so I worry a little bit more about the consumer just being real cautious right now, and that just affects everything. It doesn't mean they're going to stop eating, doesn't mean that, but I don't know if they're going to be willing to pay, when you back it up to the hoof, $200 a head. It might be 150 a head or 160. We know the supply is tight, but the market may have to come down enough to keep the demand alive.
I would think at this point here, as we're getting past this November WASDE report and more, I know we'll have a December report. That's typically pretty quiet, though. The January one will be the next big milestone. So I'd have to think for farmers and ranchers at this point, get the pencil out, sharpen it up, and take a strong, solid look at what you're doing for your marketing plan right now would probably make the most sense at this time, wouldn't it, Bryan?
I'd keep looking for opportunities, and maybe it's time to take some risk. And what I mean by that is, we're in this, corn. No matter how you cut it, it still hit its lowest price of the year today in December corn. It didn't blow through it, but it still hit it, and that's really hard for farmers who had big income last year and good prices to look at this and really, think about marketing right now. They want to bury their head in the sand and say, let's just get through this harvest and worry about it later. The problem with that could be that later might mean we're at the same price we are now, or we lose the carry in the market. So really have some good critical conversations. And I'm not saying this is for all producers, but like going into the last couple of weeks here and hearing some of these yield results, if our producers have been talking to us, we've been able to relay that, say, hey, this is what we're hearing. This is the theme. 6 out of 10, 7 out of 10 farmers are telling me their corn, they're saying, I don't know where it's coming from, but it's better than they thought. So then you can adapt a strategy in case the market continues to weigh on itself. And that's what we've been trying to encourage producers to do, is recognize that every day the market opens up and it's a price, and it changes from that point onward. So it's always a reset. Now, from a producer's perspective, it's not a price they like, but is it something they still have to defend, work with, try and improve upon? So a lot of things that can be discussed as ways to try and scratch and claw, as I call it, and dimes and quarters here and there to try and make it work.
Bryan, I know if folks have questions, they can reach out to you and the team there at Total Farm Marketing easily to get those questions answered and have a conversation. How can they get a hold of you, Bryan?
They can get a hold of me by giving us a phone call, first of all, at 800-334-9779. I'll start with that. And then if you want, email Bryan with a Y at totalfarmmarketing.com, or jump onto our website, totalfarmmarketing.com, and take a look.
Bryan Doherty with Total Farm Marketing. Always great to have a conversation with you. Thanks for joining us on a busy WASDE report day. Have a great weekend. We'll talk to you again next week.
Thank you very much.
That's going to do it for Market Talk today. Find us at markettalkag.com. I'm Jesse Allen. Have a great afternoon.